It's a snowy Friday here in the DC area, and I'm going live on Substack this afternoon to talk about the 8A audit letters that went out to all SBA 8A participants today. It's December 5th, and the audit letter asks for a response with CSV and PDF files within 30 days. So we're talking about January 5th, 2026. Merry Christmas and Happy Holidays from SBA to the 8A participants. I did hear from one graduated firm that said that they received a letter as well. So it's not just current 8A firms, but potentially graduated firms. This letter follows up on an announcement that SBA made back in June that it was going to conduct a full-scale audit of the 8A program after Department of Justice uncovered a bribery scheme that involved the USAID, U.S. Agency for International Development. That announcement about the full-scale audit said that SBA would go back over 15 years to look at the 8A program. Fortunately, the letters that went out to 8A firms did not ask for 15 years of information. For the most part, they're asking for the last 3 fiscal years of information. That would have been a lot for SBA to go through. There are over 4,000 8A participants. So even with 3 years worth of data, there are 13 points in the letter that SBA is asking for. It's going to be a considerable amount of documentation that SBA receives from 8A firms potentially as early as January 5th. It's not clear whether SBA will entertain requests for extensions from that. It's obviously a busy time of the year, not just the holidays, but end of the calendar year as well. So it's going to be quite a challenge for the firms that receive this request from SBA to put all of this information together. I'm coming online to talk about 5 areas that I think SBA is going to look into when it receives this documentation. The 5 areas are the limitations on subcontracting, the compliance with the mentor-protege program, excessive withdrawals, benefits reporting for entity-owned firms, and indications of bribery or kickbacks. So I'll go through each of those one by one. First, the limitations on subcontracting. This is an issue that I went into with the ATI Government Solutions video. That's really the video, the circumstances that has pushed SBA to send out this letter. As a recap, there was a YouTube video from James O'Keefe that involved an 8A contractor, as an entity-owned contractor named ATI Government Solutions. And in the video, the employees of ATI Government Solutions stated and alleged that there were potential pass-throughs that could have happened, that up to or as little as 20% of the work on 8A contracts allegedly was being performed by ATI Government Solutions. The reason 20% is a concern is that's lower than the limitations on subcontracting for most contracts. The limitations on subcontracting rule requires that on 8A contracts, the company that receives the contract perform at least, for most contracts, 50% of the work by its own or with similarly situated entities. For an 8A contract, a similarly situated entity is another 8A firm. Now, that rule is a different percentage for construction contracts, and for specialty trade construction. For general construction contracts, it's 15%. For specialty trade construction, it's 25%. So you could go lower than 20% on a general construction contract. And also, it counts similarly situated entities as similar to the prime contractor performance. So in the example of ATI Government Solutions, if ATI Government Solutions was subcontracting some of its work to other 8A firms, and that might include individual owned 8A firms, then that work done by the other 8A firms would not count toward that 50% limit. Now, how do you find out which percentage applies to your contract, it depends on the NAICS code. You have to look at the NAICS code of the contract. That's why SBA is asking for a copy of the 8A contracts as well as the subcontracts. We want to see the NAICS code to see which of the limitations on subcontracting percentage counts for that contract. One area that was interesting that SBA asked for was lists of employees. And part of the reason that SBA is probably asking for a list of employees is it's looking at whether you might be counting as an 8A firm independent contractors toward your performance. Independent contractors under the limitation of subcontracting do not count as your employees. They are counted as subcontractors for the purposes of limitations on subcontracting. In some of the other programs, like women-owned, service-able vet, those independent contractors might count as similarly situated entities. That's not going to be the case in the 8A program because you're not going to have an independent contractor, usually a 1099, that's going to be certified into the 8A program. So if you have a 1099, that 1099 counts as a subcontractor, not employee per SBA regulations 125.6. That's what it says in 125.6. So the point of the request for, say, the general ledger, the copies of the contracts and subcontracts, employee list, a lot of that is going toward looking at the limitations on subcontracting and particularly looking at whether the 8A firm might have been used as a pass-through, similar to the concerns that are coming out of that YouTube video. Is it really SBA is looking at, is this 8A firm being used as a front for a subcontractor, maybe even a large business, in order to get access to sole source contracts? So that's number one, the limitation on subcontracting. That's probably the number one thing that SBA is looking for. And a lot of that concern is because of the videos on ATI Government Solutions. The second area that SBA is probably looking into is the mentor protege program. The mentor protege program allows a small business, in this case an 8A firm, to partner with a mentor, which can be a large business. And the performance of that large business counts as a small business contract performance. That large business mentor gains access to small business contracts and even 8A contracts through the mentor protege program. But there's an important compliance requirement in the mentor protege program. It's the 40% rule. The 40% rule says that 40% of the aggregate work of the mentor and protege together must be performed by the protege. So what you do is you take all the work that's done by the mentor, you take all the work that's done by the protege, you add that together, that's some amount of work, and then 40% of that work must be done by the protege. There's additionally a requirement that the protege's work not just be ministerial or administrative. But here SBA is asking for general ledgers, trial balances, copies of subcontracts. And it seems like part of that would allow SBA to calculate for 8A firms that are proteges whether that mentor-protege relationship is complying with the 40% rule. The 40% rule, again, is a rule that considers whether work is being done by that entity or by its employees. So here again, if you have 1099s, those are going to be considered subcontractors, which would be outside of the work being done by the mentor protege, not work being done by the protege toward that 40% rule. Another thing to think about on the 40% rule is whether the mentor has affiliates. That mentor share, when you're aggregating the mentor and protege work together, includes any affiliates of the mentor. So if oftentimes, if you're working with a large business, they're going to have different divisions, different subsidiaries. If those subsidiaries and divisions are affiliated with the mentor, then that counts toward the maximum 60% that the mentor would be able to do in a mentor-protege relationship. I'll just note also, though, going back to the ATI solution, that this 40% is on top of the 50% limitation on subcontracting that goes into services. So in a services contract, if there's a mentor-protege joint venture, 8A program or not, but let's say it's an 8A joint venture that wins that contract, the 8A firm can actually do as little as 20% of that contract. So when you heard in the ATI Government Solutions videos that ATI was doing 20%, that can be completely legal and compliant with SBA's rules through a mentor-protege relationship. The reason is the joint venture itself can do as little as 50% of the contract under the limitation on subcontracting. They can subcontract out 50%. And then the protege in that joint venture can do as little as 40% of that 50%. What do you get in the end when you combine those two percentages? You just multiply them. You get 20%. So it's possible on a services contract, which still has a 50% limitation on subcontracting, that the 8A firm in a mentor protege joint venture can do as little as 20% of the contract. So when you hear, oh, there's 20% that's being done by the 8A firm, there are situations similarly situated as another one where that can be entirely legal. SBA is looking for the documentation that would show in some of those admittedly surprising cases whether it might actually comply with SBA's regulations. So that's why they're asking for the copies of the subcontract, general ledger, employee list. So number one, number two were limitations of subcontracting and mentor protege program. Number three is about excessive withdrawals. Every 8A firm is subject to a limit on excessive withdrawals. This is in 13 CFR 124.111, 112D, 124.112D. And it gives a chart as to what is considered to be excessive withdrawals. The chart says for companies with sales up to $1 million, excessive would be above 250,000. Between $1 million and $2 million, excessive is over 300,000. Above $2 million, it's exceeding 400,000. Excessive withdrawal could be anything from a cash dividend, distribution in excess of what's needed to pay S corp or partnership taxes, cash and property withdrawals, payments to immediate family members that aren't employed by the company, bonuses, and investments on behalf of the owner. So the SBA, if it finds that funds or assets have been excessively withdrawn, and the withdrawal was detrimental to the achievement of the targets, objectives, and goals in the participant's business plan, SBA may initiate termination, early graduation, or require a reinvestment of funds or other assets. SBA can probably look at your general ledger, which is being asked in this 13-point item, to see whether there were withdrawals that went to the owners that would be deemed excessive per that schedule. So one was limitation on subcontracting. Two was the 40% rule in the mentor protege program. Three was the excessive withdrawals. The fourth area that this audit request seems to be getting at is benefits reporting for entity-owned firms. That's for 124.604, and that's specifically for firms that are owned by Alaska Native corporations, Native Hawaiian organizations, and Indian tribes. There is a case out there involving a Native Hawaiian firm where it's suspected that some of the owners are going to are taking excessive amounts from the firm that should have been going to benefits for the Native organization, to the Hawaiian community or Alaska Native community or the tribal community. Firms report on their benefits to their community on an annual basis to SBA. That's what 124.604 states. But using some of the material that SBA is collecting from entity-owned firms, there's a few hundred of them, SBA could look further at whether those benefits are actually being distributed to the communities, or perhaps whether they're being diverted for the use of individuals or officers of the firm. So SBA may be looking at that. That's probably going to be difficult for SBA to really get into, because I would think that most of these benefits are probably flowing up to the top level organization, the actual Alaska Native Corporation or the nonprofit or the Indian tribe. You wouldn't necessarily see those benefits going out from the individual 8A firm. number one was limitation on subcontracting. Two was 40% rule in the mentor protege program. Three was excessive withdrawals. Four was benefits reporting. And then number five is looking at whether the documents show bribery or kickbacks. The USAID situation that led to the program audit involved a bribery scheme. This was all the way back in June. The Department of Justice disclosed a scheme and came into a settlement agreement with a number of companies where a contracting officer, USAID contracting officer, pleaded guilty to bribery. And the press release from Department of Justice stated that that USAID contracting officer was listed as an employee of the 8A firm. It said the bribes were often concealed through electronic bank transfers, falsely listing Watson on payroll. Watson was the USAID contracting officer. So I don't know that SBA believes that it's going to find this, but it could be the case that through review of employee lists and payments that there may be uncovering of or a thought to try to uncover additional schemes similar to this. There's also a law about kickbacks, subcontractor kickbacks. It's the Anti-Kickback Act. And the law says that it's illegal for subcontractors to provide payments in the form of kickbacks to prime contractors in order to receive subcontracts. So that may be another area that SBA is looking through, and you'll be able to find that through some of these documents that are being submitted to SBA. The big concern, I think, now for 8A firms is just getting these documents together. But additionally, you really do have to be thinking about what is SBA going to be reviewing in these documents? What sort of areas is it looking to? If you're not able to comply with some of these requirements, like limitations on subcontracting, the 40% rule, SBA has stated that it could result in the firm not being eligible for continued participation, additional remedial action, and then if it rises to the level of that USAID scheme, it could be that SBA gets Department of Justice involved in a criminal or a civil capacity too. Let me know if you have any questions. I'll probably do a follow-up video at some point to address any questions about the 8A audit. Happy holidays to everybody. Best of luck in responding to this SBA inquiry. Let me know if there's any way that I can help, and I will see you in the next video. Thanks very much, everybody.